Good day everyone, my name is Marcus,
And I'm Jimmy.
and if you're new to the channel, welcome. If you're not, thank you so much for supporting us all this while. Just remember that every like and subscription goes a long way in supporting our production. Now before we dive into today's video, have a look at these disclaimers before we proceed. Again, we would like to thank all of you for supporting last week's video. This will be the second part in the series where we will talk about why and when Bitcoin was halved and the future potential for this cryptocurrency. So the Bitcoin halving occurred on May 11th, 2020 at around 4 p.m. Eastern Time. So basically for every 210,000 blocks mined, or about every 4 years, the reward given to Bitcoin miners for processing transactions is cut in half. This cuts in half the rate at which new Bitcoin is released into circulation. This is Bitcoin's way of using a synthetic form of inflation that halves every 4 years until all Bitcoin is released and is in circulation in the digital world. This inbuilt system will continue until around the year 2140. At this point, miners will be rewarded with fees for processing transactions that network users will pay. These fees ensure that miners still have the incentive to mine and keep the network going strong even after all Bitcoins have been mined into existence. The idea behind this is that competition for these fees will cause them to remain low after halvings are finished. And this halving is particularly significant because it marks another step in Bitcoin's dwindling finite supply. There are only 21 million Bitcoins in existence, and at the time of writing this script, there are 18,361,438 Bitcoins already in circulation, leaving just slightly over 2.6 million left to be released via mining rewards. In 2009, the reward for each block in the chain mined was 50 Bitcoins. After the first halving it was 25, then 12.5 and so on. And then come May 11th it will be 6.25 Bitcoins per block. To put this in another context, imagine if the amount of gold mined out of the earth was cut in half every 4 years. If gold's value is based on its scarcity, then a halving of gold output every 4 years would theoretically drive its price higher. This could cause some implications for investors as other assets with low supply, like gold, can have high demand and push prices higher. In the past, these Bitcoin's halving have correlated with massive surges in Bitcoin's price. The first halving, which occurred in November 2012, saw an increase from about $11 to nearly $1,150, which is almost a 1000% increase. The second Bitcoin halving occurred around in July of 2016, and the price at that halving was about $650, and it increased to a few $1,000s after that. So you can see how the halving correlates with significant volatility and sharp increases in the price of one Bitcoin.
As the Fed perpetually increases the supply of dollars around the world, assets such as Bitcoin and other promising digital currencies should go a lot higher. This is effectively the same phenomenon that gold and GSMs have benefited from. Ultimately, the trillions of dollars created by the Fed will filter through to the real economy, which will very likely lead to inflation, loss of purchasing power, and possibly even a loss of confidence at some point. Quantitative easing unlimited is not going unnoticed, and market participants are beginning to understand that there is no returning to the old normal. There is only the new normal now, and it's filled with incredibly easy credit, rock bottom interest rates, and essentially limitless amounts of capital provided by the Fed. Even Goldman Sachs is hosting a conference on inflation, crisis, and Bitcoin, which is a positive development for the cryptocurrency industry itself. This is telling that the major organizations and the smartest guys in the room are starting to recognize potential in the digital asset industry due to massive fiat devaluation. Additionally, the current fiat financial system is filled with faults, redundant charges, and inadequacies. Therefore, banks, large institutions, as well as retail consumers or investors could start to utilize digital assets on a mass scale within the next several years.
This means that there are many digital assets out there, but we definitely have our own favorites. Some of them include first and most obviously Bitcoin. Bitcoin is typically the first option for many people as it is extremely secure, is the original and best known digital asset in the world. It is primarily used for storing value, but Bitcoin can also be used as a medium of exchange. It has also been picked up by many mobile payment networks, including digital merchants such as Square.
Litecoin. They call it the silver to Bitcoin goals. Yet, Litecoin is simply just a much more efficient digital currency. When it comes to mass transactions, Litecoin is cheaper, faster, and can handle scale much better than Bitcoin. Zcash. Litecoin is not only in the efficient medium of exchange market. In fact, Litecoin has several worthy adversaries in this space. A factor to consider is that this market is expanding and could grow dramatically as fiat currencies continue to debase, and could represent a significant share of the global store of value and worldwide medium of exchange markets within the next 3 to 5 years. Zcash is a great transactional coin, which is fast, efficient, and offers an added layer of anonymity to your transactions. Dash. Another very efficient and promising transactional coin. Dash. Another very efficient and promising transactional coin. Dash is very safe, efficient, cheap, and has an added layer of cryptography to provide more anonymity to users of its blockchain.
The next one will be Monero. If you want untraceable, there's only one coin that can handle this task. Monero is a truly anonymous coin, whereas Zcash and Dash transactions are extremely difficult to monitor. Moneros are essentially impossible to trace. So for those of you who are interested in buying and selling Bitcoins in a very clandestine manner, this is the coin for you. We just went over some of my favorite transactional coins that have enormous market share potential going forward, in our view. However, it is not just all about transactional coins in the digital asset world. There also exists another kind of cryptocurrency, which is functional coins. These include coins like Ethereum, Tron, Tezos, Cardano, Stellar, and Neo. These also represent very promising long-term opportunities in the cryptocurrency market, especially Ethereum, which was founded by a Russian whiz kid and has grown to be one of the most frequently used coins in the Eastern European sphere. There are many documentaries on this Russian kid, so do check them out for a better understanding of how Ethereum works and whether it is going to be a strong rival to Bitcoin. Now on to the technical analysis of the Bitcoin chart. If we take a look at the chart right here, we see that Bitcoin has staged a very powerful rally since the volatility-induced panic bottom of mid-March. In fact, Bitcoin gained as much as 165% from the 3,800 March low to the high of around $10,000 in early May. Can you believe it? $10,000 for just one Bitcoin. However, in recent times, Bitcoin has been trading at a range of roughly 8,000 to 10,000. It has been consolidating in this range for almost a month now. At the point of writing this script, the price was at around 8,700, but Bitcoin appears to be setting up for its next leg higher above $10,000. In fact, I believe we will test it in the next few weeks or so. Bitcoin has attempted to penetrate this level on several occasions, but the favorable fundamental backdrop should enable Bitcoin to break above this price level soon. At the moment, for those who are scalping this is the next key resistance level. For downside protection, I am watching the 8,500 support level, and then if it breaks that, it doesn't mean the chart is broken. We could just see it drop to the next support level at $8,000. If for whatever reason, any negative news or the worst case scenario happens, I believe the fundamental support line will be at $6,500. That's only for the worst case scenario in my view.
The bottom line is that tokens, whether it is Bitcoin, Litecoin, Tron, Tezos, etc., are not just coins. These are unique enterprises built upon extremely capable blockchains, coupled with their own digital coins and deep infrastructure projects. Right now, the industry appears to be notably unappreciated, and its future potential may be drastically underestimated by many. Moreover, consider the trillions of dollars floating around looking for a place to park to get positive view in this financial environment. Due to inflation resistance and future potential, I believe a prime place for future investment will likely be the digital asset segment. There is a lot of uncertainty concerning equities going forward. Gold, GSMs are doing great. But in the intermediate term, there are not that many bright spots in the market. Furthermore, the Wuhan virus will likely continue to weigh on international confidence and consumption for many months. While it may take some time for the inflation to filter through the real economy, once it does, prices for various assets including Bitcoin should go substantially higher. There is no doubt that Bitcoin will offer attractive returns in the long run, and we think that cryptocurrency will trade as a high beta gold stock in the future and could capture up to 5% of the gold market cap, pushing the price to 25k. However, we are less convinced that the recent halving will immediately have a positive impact on Bitcoin this time, and we could expect the macro environment to become more important than the dynamics of supply and demand in the future. Negative rates, high inflation, the surge in money supply are all factors that could benefit to Bitcoin and other cryptos in the medium to long run. Hence, we think it's an interesting asset that macro managers should include in their portfolios. Nevertheless, there's a likely scenario that could challenge the price of Bitcoin in the near to medium term. We saw that the titanic rise in the Fed's balance sheet since its fourth quarter 2019 lows, combined with the government's stimulus, could increase the uncertainty over inflation expectations in the coming months. According to the New York Feds, even though the median inflation expectations do not show a discernible trend in response to the COVID-19 crisis, uncertainty and disagreements in inflation expectations across respondents have increased in the recent weeks.
Again, we hope that this video has enhanced your understanding of Bitcoin and the dangers in investing in it and navigating the world of blockchain in general. After my analysis in this video, I am sure some of you will be too interested to buy this cryptocurrency. Hence, in the third link below there will be a step-by-step guide to buying Bitcoin on Investopedia, so do check it out. I'll be flattered if you had one key takeaway from this video which you can share with your other friends. Leave any questions you have in the comments and I'll try my best to answer all of them thoroughly. Stay tuned for the next video and invest safe.